Dow's outperforming it 100%. It's quite remarkable. Just take a look at the Dow movers today. And of course, when Walmart opens up $10 and Cisco opens up, what, $2 or $3, Boeing opens up $8, $9, that's 125 points, just those three stocks. Then you throw in Caterpillar on the China talks, it moves a little bit. You got the Dow dramatically outperforming the S&P 500. Speaking of the China talks, I just want to show you the futures overnight, because we got word. We're getting word about these, what they call low-level China talks, around 10 o'clock last night, and we moved immediately 10, 12 points on the S&P futures. That's a sign that what really still moves the market here in terms of market issues, let's put the list up here, is still China tariffs and concerns about slowing growth around the world, and that's what moves our markets. Yes, there's still a lot of concerns about emerging market contagion and a little less liquidity out there. You know, liquidity recedes, money comes out of emerging markets. And the question is it confined to emerging markets or does it spread? We don't know. There's no answer to that. But certainly, I think the China tariffs is what moves the markets here. In the last few weeks, we have seen very ugly emerging market trends on the stronger dollar and the contagion issues and commodity stocks. Just to show you, it's very unusual to see just a couple of weeks, China internet stocks down 15%, the miners, steel stocks, copper miners down 15%. This is 2 weeks. Emerging markets drop 8% overall. Very rare to drop that fast. They're usually not that quick to move around. I'll just show you the relative strength index. This measures how quickly the speed and change of price movements are. When you're below 30, you're oversold. This is very short term, just a couple weeks of trading. When you're below 20, you're really oversold. If you're 10, folks, that's like 4 standard deviations away. So China internet, gold miners, steel, copper miners, emerging markets almost never see this kind of selling so rapidly in the last few days. I'm not saying these are buy notices. On some people's charts, they certainly would be, but that's a clear sign that the market's very much overreacted. If you see today, what's moving today, guess what? It happens to look exactly like this chart. So there's, well, we had the global markets here, but you see some of the sectors like metals and mining, China internet stocks, gold miners, and steel stocks. They're the ones that are all moving. My key point about all this, there have been individual sectors of big damage in the commodity space and in the emerging market space. But overall, if you look at what's really going on, this is why the U.S. is still the place to be. Global contagion concerns are still largely confined to international markets, not the U.S. The Russell's only 2%, S&P only 2% from its historic highs. And you can see there we're more than 20% off the recent 52-week highs in some of the big global markets, particularly China, Brazil, even Germany is still 10% off its highs. United States, still the place to be, 300 points up on the Dow.